Is it following extra cost of sales, finance cost, investment? They gave you the numbers. Okay, the moment you get the numbers, you have to focus on this. Revenue notes and 1 and 3. Is that Vernon made a large sale of goods on 1st July, which was also the date of delivery. Under the terms of agreement, Vernon will receive payment of 8 million on 30th June. Currently, Vernon recorded 4 million as revenue and trade receivables. The directors intend to record the remaining 4 million in the year ended 31st December 2009. The cost of these sales has been accounted for correctly in the financial statements for the year ended 31st December 2008. Vernon has a cost of capital of 8% and appropriate discount rate is how much? What happened? First you understand. They have made a large sale of goods, is it right? On 1st of July, okay? 1st of July 2008. And under the terms of agreement, Vernon will receive payment of 8 million. When they will receive 30th June, by next year end, okay? 30th June. Vernon recorded 4 million in revenue and the balance 4 million in the receivable. The directors intend to record the remaining 4 million revenue in the year end. See the thing. Is that this is the glitch. Okay? This is the glitch. When happened? It happens when it happens on 1st July, is it right? 2008. Is it right? They are going to receive by how much? 30th June 2009. Okay? 30th June 2009. Is that they are preparing financial statements when 31st December 2008 2008, which of the delivery recorded in the trade. The directs intend to recover the remaining amount in the year 2009. Is that 31st December 2009. Okay. The directors intend to recover remaining 4 million 2009. The cost of this sale has been accounted for correctly in the financial statement for the year ended 2008. Is it right? Vernon has a cost of capital of 8%, which has the appropriate discount factor would be 0.49. Now they say that they have given you the amount which they are receiving when they are receiving after they are receiving on 31st December 2008. Is it? They preparing financial statements on 31st December 2008, they will receive trade receivables, that fine. If this is the case, is it right? If this is the case, what we have, why when they have given you, we have to record the sales on present values. Is it right? On present values. Fine. First we will do this. Is it right? First we will. Next, what is there? There is overseas sales is there. Is it? There is overseas sales is there. Fine. The third one is what? They are talking about the bonds. Okay, fine. They are talking about the bonds. Fourth one is that they have revaluation is there. Is it right? Fourth one is revaluation. Good. Alhamdulillah. We are covering all the things. The fifth one is there. Fifth one is with respect to the investment properties. Okay. Fifth one is respect to the investment properties. Sixth one is with respect to the tax figures. Is it? Sixth one is for tax figures. And seventh one is what? Seventh one is with respect to convertible shares. Equity shares issued additional 5 million shares, market value 5 on perform 2 for rights issue at the market value of the share is 1st July 2008. Okay, all the points has been covered. Is that very technically. Okay, Now what you have to do, you have to make a profit and loss account. Is that fine? Nothing is it? It's only thing we have. First, you have to understand. The moment we have an understanding, we will have more clarity. Okay. Now, what you have to do? First, you have to prepare notes. Okay. Notes. Yes, you can prepare notes in the beginning, or you can prepare notes first, and then you can put the things as your convenience. Okay. Next, working note 1. Fine. Working note 1. What they say? They say that they are recording how much? 8 million. Okay, 8 million on 2009. Okay, 2009. The receive payment of 8 million on 2000. They receive, but when the sale has been happened, the sale happened right now. Is it right? The initial the revenue should be recorded on present value basis. 1 year they gave you. 1 year how much? 1 year discount factor is 0.9259. 0. Where is calculator? 8 into 0.09259. It comes to how much? 7407. Okay, is it right? So you can do in any basis. Is it right? Both will have the same thing. 8 million divided by 1.08 to the power of 1. You know present value? C1 divided by 1 plus R to the power of T. How much you will get here?
7.4.
How much?
7.4.
7.4. 7.407. Is it a million? Now, is that 7.1? How much they have received right now? Is it how much they have received right now? They have received less. Is it right? Less. Is it received? Received. Is it they have received? They have received payment. How much they have received? They have recorded. Vernon has recorded 4 million in revenue, and the balance they will receive after 1 year. Is it right? The directors intend to record the remaining 4 million in the year. Means they have received how much? They received 4 million. Is it right? Received. We have to be very clear. Which was the date of delivery? Under the terms of agreement, Vernon will receive payment of 8 million on June 30th. Currently, Vernon recorded 4 million in revenue and trade receivables. Is it? They have received. Is that they are received already? How much they have received? They have received 4 million. Okay, they have received how much? Though 4 million. How much they have yet to receive? They have yet to receive 40.7 million. Is that this is what it is happening? This is trade receivables. Is it right? Is it right? This is trade receivables. Fine. The directors intend to record the remaining 4 million revenue in the year 31st December 2009. When they are going to record this month, they will record it after 6 months. Okay, 6 months. Is that from here to here? How many? This is 2009. Okay, 2009. Which was the date of delivery. Under the terms, Vernon will receive payment of 8 million on 30th June. Okay, on 30th June. Fine. The directors intend to record the remaining 4 million in the 2009. Fine. Good. Okay, 3.407 will be trade receivables. For July 2008, 1st July 2008, 31st December 2008. The cost of the sales has been accounted for correctly in the financial statement for the year ended 2008. Vernon has a cost of capital of 8%, at which appropriate discount rate would be 9.259. Now what we have to do, how much they are going to receive, they have present value of how much? 7.407. Is it right? 7.407. Now this 7.407, they will not keep it idle. Okay, they will not see, this is the amount they are going to receive. Is it right? Usually what happens when you are is it, this is the receivables. Is it? Next I will just put with another marker. Okay, I will put with the blue marker. How much is going to be the receivables? Receivables will be how much? Total amount. Total. I will say total revenue. I will not say receivables. Revenue and receivables. I will put it like this. Is it? I will put it like this as is it? As revenue to revenue current year. Is it? Revenue current year, receivables next year. Is it right? Total will be how much? Total will be 7.407. Okay, 7.407. Now what happens? They are closing the account when they are making a final. They are preparing the financial statements when they are preparing the financial statements for the year ended 31st December 2008. Is it? They are preparing financial statement for the year 31st December 2000. Definitely, when you are going to have receivables, you will not keep that receivables as idle. Okay, you what will do? You have the amount to be received. Is it right? Your receivables, your value of money will decrease. Immediately, what will do? You invest these receivables for 6 months. Listen carefully. You invest these receivables for 6 months at the rate of 8% so that on these receivables you will get income. Is right? You will not keep it, you will not say that these are the receivables which I am going to keep it at. See, sales happens on 1st July. Is it right? Sales happen on 1st July. You are going to get 8 million. Is it right? First you have converted into present value. When you convert it into present value, we have total amount of present value minus whatever the amount you are going to receive. When you are going to receive this amount, you are going to receive this amount on 31st December 2008. Is it right? Now, see, it's a receivables for you. Is it right? You will take this and you will take this receivables, the sales as such, and immediately what you will do, you will make investments. Is it right? This is the way we are going to generate revenue. That has not mentioned anywhere. That has been not mentioned anywhere. They say that the large sale of goods which has date of delivery, they receive payment 8 million, they recorded 4 million and receivables. The directors intend to record remaining and the year end. The cost of these sales accounted correctly. Your cost of capital is 8%. Fine. Nowhere, I will just check. Nowhere. See, nowhere they have done, but somewhere they have done with respect to what? Investment income. Is it right? Investment income 0.3. Investment income also. Investment income is also, if you take into consideration, they have not mentioned where they have been expended as operating expenses. No. Is it right? They have not mentioned anything. Is it? Now, what we will do, we will take this 7,407. We invest at the rate of 8%. That is the cost of capital. For how many months? 6 months till December 31st only. Is it? Till December 31st only. Okay. Now, investment of revenue and receivables. This is the first time, not first time, we have done this in theory. Okay. We have done this in theory. How we are going to make it. Is that how much is that? See, I will write that. How much is the total revenue current year? Total revenue. Is it? I will put it like this. Yeah, I will put it like this. 1 minute. Total present value of revenue. Total present value of revenue is how much? 7.407. Okay, total present. Now, what we have to do? We have to add. Is it right? Interest. Add interest. How much? 7,407 times 0.08 times 6 by 12. 6 months. Okay. Till when? Till 31st December 2008. Don't put add, just you put interest. Okay, just you put interest, okay, in you 1 minute. Is it? You will put interest income. Okay, interest income. How much you'll get?
0.296.
0.296. Just give me time. Okay. Just give me time. By the time we will complete, we will get a good idea. Okay, don't worry about it. Just give me time. Okay, this is what happened. This is going to be the this is going to be the invest finance income. Okay, this is your income as such. Is it fine? Now this is the income. Fine, that much is there. Okay, what we have done here in the working note one, very small one. Okay, we have calculated the present value of the sales. We have reduced 4 million, which you are going to receive during the current year, and whatever the amount which you are going to receive, we have trade receivables. Is it trade receivables as per the present values? Then whatever the amount which going to be received, present values, what is the amount is there on hands, we can make investments for the 6 months, and that investment income we will show. Is it right? That investment income of how much? That investment income of 296. Is it right? 296 we will add to the investment income. Okay, this is the point number 1. What is the point number 2? Vernon also sold goods to overseas customers on 2008 for how many? 12 million foreign currency chromids. They agreed a 60-day period term. No entries has been made to record the sale. All the goods were correctly removed from the inventory and expense in the cost of sales. The amount remains unpaid. Again, very slowly. Vernon Company also sold goods to overseas customer on 1st December 2008. How much? 12 million chromids. They agreed a 60-day payment term. No entries has been made to record these sales. Although the goods were correctly removed from inventory and expense in the cost of sales, the amount remains unpaid. What is the relevant exchange rates? 1st December and 31st December. When the sale has been done, the sale has been done on 1st December. Is it? The sale has been done on 1st of December. Convert that amount into dollars. Okay. Okay. Convert that amount into dollars. What is the sale in terms of dollars? Is it? And what is the sale in terms of 1st December? What is the sale? 31st December. What is the sales? Is it right? Then we will see what is the difference. Okay, what is the difference as such? Fine. Point number 2. Point number 2. They have given what? 1st December. Is it right? Value in dollars on 1st December 2008. How we have to calculate? We have to divide or we have to multiply to get in dollars.
Divide it.
Divide it. It has been given here also. They are given. See the thing. Divide it. Okay. Divide it. 6.4. Is it right? 6.4. Not 6.4. Sorry. Not 6.4. Not 6.4. How much is it? 12 million. Is it? 12 million KR divided by 6.4 per dollar. Okay. How much you will get?
1.875.
1.875 million in dollar, okay, in dollars. Right? Now, same thing. Value as on 31st December 2008 in dollars, okay, in dollars. How much? 12 million KR divided by 6 per dollar. How much? 2 million. Is it right?
2 million.
Fine. Means if we are going to receive on 1st December, how much you will receive? 1.875. But if you are receiving on 31st December, you will receive how much? You will receive 2 million. Means the receivables has been increased. Is it right? The receivables has been increased. Right? The same thing. Is it right? The receivables has been increased. Is that by how much? By 2 million minus 1.875 million. It comes to how much? It was increased by how much? It has been increased
0.125.
0.125 dollar million. Is it right? Dollar million. Then that much is there. Is it right? We that much we have to do. Okay. Next. Is it what they say? The third one. Okay. What happened to the third one? Are you understanding?
Yes.
Now, what happened to the third one? Vernon company acquired 9 million, okay, 9 million 5% bonds par value January 1st, 2008. The interest receivable on 31st December each year. Vernon company incurred 0.4 million brokerage fees when acquiring the definitely 9 million plus 0.4, 9.4 million, okay, which has been expensed to operating expenses. These bonds are repayable at a premium, so have an effective rate of 8%. Vernon has recorded interest received on 31st December in investment income. How much you have to add as a investment income? Is it right? How much you have to add as a investment income? How much he is investing? He is investing, Hajay, the thing. He has taken a 5% bonds and he has these bonds are repayable at a premium of effective rate of how much? 8%. Okay, and fine, that's all. 9 million bonds. The interest receivable each year is this much and incurred 4 million brokerage fees. How much they have paid interest? 9 million into 5%, how much? 9 into 0.05, 0.45, okay, 0.45. Is that 0.45 million? Is it right? Now, what you have to do, is it right? Is it? What we have to do? Professional fees, brokerage fees, is it right? Which fees they have said? They said that it is the brokerage fees. Is that professional brokerage fee should be added. To bonds. Okay. How much is there? Issue price is how much? Sorry, acquired price. Is it right? Acquired price is how much? They have purchased the bonds. Is it right? They have purchased the bonds as such. Right? Acquired price is how much? Acquired price is 9 million plus brokerage cost is how much? Brokerage cost is how much? 0.125. 0.4 million. Okay, total comes to how much? 9.4 million. Is it right? 9.4. What is the difference between impairment and amortization?
Amortization for finite life
Okay,
and impairment for indefinite life.
good. Is it right? Here it is, see, when you are talking about the bonds, it is a finite life. Is it right? It is a finite life. Okay. Next, opening balance. Okay, opening balance. I gave a lot of space here. Okay, opening balance, interest at the rate of 8%. Is it right? Is it right? Payment, interest payment. Is it right? Interest payment at the rate of 5%. Is it right? Closing balance. Okay. Opening balance is how much? 9.4 million. Okay. On 9.4 million, how much is the interest?
.752.
0.752. What is the rate of interest at 5% on 9? See here, see, this is the difference. 9.4 into 0.08, whereas here 9 into 0.05. Is it right? Here, when we are talking about the payment of interest, is it payment of interest? We have to pay at the whatever the value of interest is there on the bond. Okay, when we are receiving, it is a different story. Okay, how much you will get? You will get 0.450. Okay, 1, 2, 3. Is that 4? 4 is what? 4 is equal to 1 plus 2 minus 3. Is it 4 is the how much you will get? 9.4 plus
9.702.
Huh?
9.702.
9.4 plus 0.72 minus 0.45. How much? 9.602.
9.702.
9.702. Okay, how much? See what they are saying. What they are saying. And 5% bond, the interest is receivable. Vernon incurred 4 million. expense to operating expense. These payables are payable at a premium of 8%. Vernon has recorded interest received on 31st December in investment income. Investment income. In 1 minute, just give me 1 second. How much is the investment income? 752. Is it right? How much is the investment income? 752. Is it right? How much is the investment is 752? Then 1 minute. This plus this minus this. Okay, no problem. 9.4 plus 0.752. 9.4 plus 752. .4 plus 0.752 plus 5. Okay, now how much they have recorded, they have investment income is how much? Is it right? Investment income total investment income is how much? 0.752 minus, is it, interest payment, how much? 0.450. Is it right? It comes to 0.302. Is it 0.302? Okay. This what is this in this one? This is nothing but you have this, you have to add. Is it? See, you have total investment income is how much? 7.752. How much you have paid? You have paid 450 on that. Is it right? Next, this income we have to show it in the profit and loss. This is outstanding. Is that we have not recorded this? We have not recorded this. This has to be shown in the profit and loss account. Is that as got my point? See, what we have done here. See, they have the professional brokerage. I will repeat one in this 1 minute. Professional brokerage fees should be added to the bonds and should not be expensed. Is it? Now, how much is there? Acquired fees 9 million. Brokerage fees is 4 million. 9.4. This much amount they have paid. This is the investment they are making. Okay, means see, you are paying a brokerage fees. It is nothing but the capital cost will increase. Is that the capital cost will increase? How much is there? 9.4. 9.4 they are calculating at the rate of 8%. How much you got it? 752. This is the amount of income you have to receive. Is that investment income? On this, definitely you have to pay interest on that. Is it right? How much they are going to pay interest? 5%. 450. Okay. Net amount is how much? 9.702. Fine. We will take into current liabilities all the things. Is right? We are not preparing for balance sheet, but if we take balance sheet, we will take that as a current liability. Okay. We'll take it as a current. Now, how much is the interest amount we are receiving? Interest amount receiving is how much? 752. Of this interest amount, how much you are paying? Is that how much you are paying? We are paying 450. Net amount is how much? Net amount is the 302. This you have to show it in the profit and loss account as what? As a investment income. Previously also we have done some investment income, is it right? Interest, that is the interest income. Okay, previously what we did, that is the interest income. This is what we are doing, this is the investment income. Okay, difference is there. Is it? That is the interest income and this is the investment income. Okay, is it clear? Check, is that you go through it, you understand it and let me know. Any doubt you ask me.
Yes, it's clear. Only we will take for profit and loss the investment income.
Definitely we'll add investment income, no? We will add investment income. How much
What
will
about 9.702, the closing balance?
that are we preparing the balance sheet here?
No.
If you are preparing the balance sheet, it will be there in the assets.
Okay.
Okay, if you are preparing the balance sheet, it will be there in the assets. Okay, now we are not doing that balance sheet component. Fine. Next, what is there? They have during the year, Vernon revalued its head office for the first time, resulting in the increase of how much? 12 million. We have to calculate deferred tax only. Is it that? We are not going to talk about anything else. Revaluation gain is how much? Is that 12 million is the gain on the property? Is it right? 12 million is the gain of the property. They have mentioned anything, what is the value of property, valued head office? Maybe they have mentioned here. Is that where is the head office? No, they have not mentioned anything about head office. No, without that it never happens. During the year, they revalued the head office for the first time, resulting in the increase of value in 12 million. If Vernon values its investment properties at a fair value model, the investment properties has been increased by how much? The investment properties has increased by 4 million. Tax rate they have mentioned anywhere? The tax figure in the trial balance from the previous, the current tax liability is how much? 3.2 million. How much is the taxes they have mentioned? Tax. Okay. Fine. 1 minute, just. Tax is 130. Okay. It is under provision or over provision? This is debit and this is credit. Tax is under provision or over provision? Yesterday I have written that. If it is on the debit side, what is there? If it is on the credit side, what is there?
If it's debit side, it will be over provision. On credit side, under provision.
Allah Kareem. Tax, is it right? Tax provision, is it right? Provision of the tax, always it's a liability. Always it will be a credit balance. If it is credit balance, it is over provision. Again, whenever it is a debit balance, debit means you have to pay. Is it right? Debit means you have to pay. If it is debit balance, it is a under provision. Debit means under, credit means you have already created liability. You have already created liability in the you have closing balance, opening balance. See, liabilities, opening balance will be on the credit side. Assets, opening balance will be on the debit side. Okay. If there is if the liability opening balance is on the debit side, it is under provision. It is under provision. Fine. Now, okay, 1 minute. Okay, it is under provision. First, we will work out with this. Is that Vernon values its investment properties. Head office. Yes. How much they have valued? 12 million. Is it right? They have valued for 12 million. How much is the deferred tax applicable this gain? Deferred tax is how much? 25%. Is it 12 million into 0.25? How much you will get? 3 million.
300.
3 million.
Oh, sorry.
3 million.
Yes, 3 million.
Okay. 3 million. You have to reduce 3 million from this. Okay. And how much is the investment properties? Investment properties is 4. Now, which one has to be taken in other comprehensive income and which one has to take into consideration in profit and loss account? Tell me. I know you can tell. Which one of these? One has to be in OCI, one has to be in profit and loss account.
The gain will be in other comprehensive income.
Which one?
The gain.
Where is gain? Yes. Good. And this one?
In profit and loss account.
Exactly. Exactly. I'm very happy about you. This is in the, is it right? Investment properties. Is it right? Investment properties is for the short term. Head office is for the long term. Okay. Fine. Very good. We will take that. Okay. We'll take how much? We will deduct how much? 3 million, and we'll take the 4 million. The tax figure of the trial balance is, I will write here. Okay. I will write here. I will write which one is there? Point number 4 and point number 5. Is it right? Point number 4. Is it right? Point number 4 the gain, is it right? The gain of 12 million, is it right? Is to be shown net, okay, net of tax. It means after deducting tax, is it right? In OCI, other comprehensive income. Okay, if you write this much, that's more than enough, is it right? The gain. Next, the gain on investment property, is it the gain of 12 million, or the gain of 12 million head office, right here, head office, that is right, the gain of 12 million head office. The gain on investment properties, the gain of investment properties must go through profit and loss account. Okay, must go through profit. This is the basic difference. Okay, must go through. This has to go through what? This has to go through the OCI. Okay, this has to be go through the OCI. Point number 4 and point number 5. Okay, point number 4, point number 6. There is a tax, is it right? The tax of 130 is in the trial balance state. It is on the debit side under provision. Is it? How much is the tax estimate? There is a tax estimate of how much? 3.2 million. Is it right? Is it? 3.2 million. What will be the total tax we have to show? Point number 6. Is it? Point number 6. Is it? Under provision. Is it right? Under provision of tax during current year. Is it right? During the year. How much is there? 0.130 million. Is it right? Add. Is it right? Add tax estimate to be made. How much? 3.2 million. Is that 3.2 million? How much is there? 3.330 million. Is that debit is under provision, credit is over provision. If it is under provision, if it is over provision, definitely you have to treat it accordingly. Fine. Now, they have issued 30 million shares, additional 5 million shares. Is it right? Additional 5 million shares. This is related to what? This is related to this question. Is it right? This is related to this question. Fine. Now, what we have to do? We will prepare the revenue account. Is it a profit and loss account? How much is the profit and loss account? Revenue, where is revenue? Revenue is where? They have mentioned is missing. No. How much is revenue? 1 minute. 1 minute. I will check. cost of sales, finance cost, investment, operating expenses. Yeah, fine. How much is the revenue? Revenue they have given here. You see the thing. How much is the revenue? How much is the revenue? 7,350. Is it right? Revenue is how much? 7,350. Next, in 7,350, is it right? In 7,350, we have to 1,350. We have to take the amount receivables also, and in 7,000, 75,350. Okay, in 75,350, the 4 million is already included. We have to receive how much? 3.4. Is it right? Plus overseas revenue is there. How much is the overseas revenue? Overseas revenue at 1st December is how much? 1.875. Is that 1.875? Okay, we will do that. Next, cost of sales is how much? 46.410. Okay, operating expenses. Operating expenses 20,640. 20,000. Are you clear about these workings? First, tell me. Slowly do it.
Yes, sir.
Slowly
Yes,
just
it's
go through
clear.
it. More because workings are important. Just 1 second. I will just first working what we have done. We have taken into consideration the amount to be receivable. How much we have received? 4 million. Still 3.407 it has to be receivable. We have to add it. Okay. Next, we have overseas income also. Overseas income is how much? We have done overseas income point number 2 on the 1st December. How much is that? 1.875. Next, you have the cost of sales. How much is the cost of sales? 46,410. Is it right? 46,410. In that cost of sales, is it right? In that cost of sales, we have increased. Is that the value has been increased? Receivables has been increased by how much? 0.125. Is it right? That is going to be loss for us. Is it right? That is going to be loss for us. Apart from that, what happening? We have in the point number 3, we have expense. Is a 4% brokerage fees while acquiring the bonds, which has been expense to operating expenses. Is that which has expense to operating expenses? In operating expenses, we have to reduce 0.4 because we have added in operating expenses. Actually, it is a capital cost, not the operating cost. Fine, that much. Next, after that, what is there? We have the finance cost 4050. Is it right? How much is the finance cost? 4050. Next, you have what? You have investment income. How much is investment income? 1,520 given in the question. 1,520 investment income. We have calculated investment income in working note 1. How much is the investment income? 0.296. Is that? We have calculated. Apart from that, what we have calculated? We have calculated another investment income is there, 302. Is it right? In point number 3. Is it right? Next, we have apart from that another what is the investment income on point number 4, point number 5? Is that investment on the investment properties? We got the revaluation. Is right? It has to be shown in the profit and loss account. Fine. That is the part of investment. Next, you have profit before tax will be there. You have the tax. We have calculated 3.3 is the tax. Is it? Next, after doing that, you will have other comprehensive income. Is it right? Other comprehensive income is how much? We have other comprehensive income is how much? We have other comprehensive income is How much? 12 minus 3, it comes to how much? 9 million. Twelve is the gain, 3 is the tax. 3 is the fine. Now, is that statement of profit and loss, profit or loss, and OCI. Revenue. How much is the revenue? 75,350. It is in thousands, okay? It is in thousands. Is it 75,350? Add. Is it right? Add. Add to be received next year. How much? At present values. How much? 3407. Which working note we have done? We have done with working note. It is working note number 1. Is it? It is working note number 1. Okay. Next, add overseas sales. Is it? Overseas sales. This is which working note we have done? Overseas sales is working number 2. Is it? Overseas sales is working note 2. How much overseas sales? 1875. Okay. Total this how much you'll get? 2, 1, 12, 13, 1, 9 plus 7, 16.
80,632.
Okay.
80.
Okay. Fine. Next. Less cost of sales. Is it? Cost of sales. Cost of sales they get directly. We don't need anything. Cost of sales 46,410. Okay, 46,410. They gave you directly. Okay, 46,410. Two, 4, 3. This is the gross profit. Next, less operating expenses. How much is the operating expenses? Operating expenses given. That operating expenses given is how much? 20,640. Okay. Less. Is it right? Less. Inflated. What we have to write? 1 minute. What is that? Inflated increase in receivables. Inflated which working note we did that? Which working note 2? Okay, working note 2. Is it right? Working note to how much? 125. Okay, 125. Next, what we have to deduct? We have deduct wrongly. Is it right? Wrongly expensed. Wrongly expensed brokerage fees. Is it wrongly expensed brokerage fees? 4 million. Okay, 4 million. How much you'll get? 1 minute. How much? No. It's not 4 million. It is not 4 million. 1 minute. Array. Is 400. How much you'll get? 2640, 125, 400.
13,057.
Huh?
13,057.
No, 2640 minus 125 minus 400. $2640 minus 125 minus 400.
20,115.
Exactly. 20,115 minus 34,222. How much will get? 14,107.
14,107.
Is it right? This is called as profit from operations. Is it right? Profit from operations. Next, minus finance cost. Is it minus finance cost? How much is the finance cost? How much is the finance cost? 4,050. Okay. How much is there? This. Finance cost is how much? 4,050. How much is finance cost? 4,050. My plus 4,050. It comes to how much? Finance cost.
10057.
10057. Add investment income. Is it right? Add investment income. Given. Is it right? They gave you. Is it right? Given is how much? 1520. Is it right? How much they have given investment income? Investment income is 1520. Okay. This they have given. Okay, 1520. Fine. And investment income. Is it right? Investment income as per point number 2, 0296. Is it right? Investment income as per point 3, 302. Okay. Is it right? Investment how much? 0.209, 0.302. Investment income as per point 5, 4 million. Okay. We have 3 different things. Is it right? Investment income. Is it right? Investment. Where is this? Okay. As per point number 1. Is it right? As per point number 1, how much? As per point number 1, 296. As per point number 2, is it right? 302. As per point number 5, is it right? As per point number 5, how much? 4. 4,000. 1 minute. I will do first. I will 296. Okay. 1520 1520 6118. 1 minute. 1 minute. Okay, we have to add, we have to put like here 296 302 4000. Okay, put like this. Is it right? Put like this. Okay, put like this. How much we'll get? You'll get how much? 6118. Okay, 6118 plus 1057. Okay, how much? 16175. Is it right? 16175. This is profit before tax less tax as per 6. Is it as per point number 6? Is it right? As per point number 6. Is it right? This is not 4. This is not 4. Okay, this is 6. This is 6. How much is that? 3.3. Okay, 3.3. 3.3. 3,300. Okay, 3,300. How much you will get here? 5, 7,
128
120,
75.
128.75. Okay, is it? This is profit for the year. Is it? This is profit for the year. Next, now what we have to do? We have to add OCI. Is it right? There is OCI is there. Point number 5. Okay, point number 4. Is it right? Point number 5. OCI is there. How much is the OCI? OCI is how much? 9. Okay, it comes to how much? 578,121. This is total comprehensive income. Is it clear? Very difficult, na? Yes or no? Tell me.
Yes, it's difficult.
Yes, I know. It's very, very slowly we have to do. Is it right? Question looks very simple. See, examination. Follow that. Don't get panic. Okay? Don't get panic. You have these adjustments now. Now you understand how you have to approach the examination. Okay? In the examination, workings are very important. You do the workings. Is that? Don't think that I have to go by sequence. Don't get stuck. Okay? Don't get stuck. That I have to go to sequence only, then I can work it. Put the numbers very clearly. Put like dash very clearly. Okay? See which working is easy. See, it is like a threading you have to do. Okay? Which working is easy, do it very fast. Okay? Which working you can understand, which work you can understand now. Every working is independent. Is it? Every working is independent. Do the working first and easy workings. Okay? Now, Likewise, whatever is easy, do those steps. Whenever you are writing it, whenever you are doing it, keep it in mind. You have to make sure that what we are writing, put the numbers here, question number and point number. Because if you do this, they will give you 2 marks here, they will give you 2 marks here, they will give you 2 marks here. Profit and loss account you are doing now, this is nothing is there. They will give what they will say that for this value, for this working, because cost of sales, we are not doing anything here, they will give only half mark. Got it? They will not do anything, they will only give half mark, as simple as that. Whereas if you take here, they will say that they are going to give how marks? 2 marks. Is that? Finance cost, we have not done anything, just you have taken from there and we have put here. They will give only half mark here. But make it sure you have to write this. Even half mark and half mark. From there you take that and from your writing here it is 1 mark. Okay? Is that? Now, if you take sales, is it right? If you take sales, is that how much sales? They say sales is going to be for 2 marks. Is that? Sales is, maybe they will give more. Is that? Likewise, if you take this one, they will say this is going to be 1.5 mark. Is that? Tax, they say 1 mark. Because tax we have to add, that's all. 2 things we have to add. Is that? Other comprehensive income, very simple, 12 minus 3. Is it right? 12 minus 3, they will give only half mark. Is that? This you have to be very, very specific. Now you take into consideration. For everything they will give. If you say 2 marks, 2 marks is for the working of sales. Is it right? 2 marks will be what? 2 marks will be for point number 1 and point number 2. Maybe they will give more. I am just giving you an idea. That's all. Okay. Likewise, don't get struck with this. First put the format also. Is it right? First put the format. You have lot of flexibility will be there. Is it right? Write down the things. Whatever the direct, take direct and post it immediately. And workings, do it separately and post it. Is it right? Very simple. We should be very clear on that. Now, what happens if unfortunately something goes wrong? Unfortunately, assume you have not taken 8%, you have taken only 7%, or you have taken 5% instead of 8 into instead of 5. They will not reduce all the marks. Is that? They will reduce only the marks for that you have done the mistake. Is it right? This is the advantage of this. Means if you do all the workings, if you post everything, you complete the paper, you will get 55 marks minimum. Complete the paper. Is it right? With workings. Don't focus that my balance sheet has to be tallied, my this has to be tallied. That is not the case at all. If it is for 15 marks, is that? If it is for 15 marks, if you do all the things, assume unfortunately, there will be some error component will be there also. But if you have done it, you will get 10 marks minimum. So that is very important. Is that? See, this is the advantage of calculation papers in ACCA. ACCA will never say that you have to tally it, then only we will give marks. No. In ACCA, it is a stepwise marking. Okay? Can I go to the question number B?
Yes.
At January 1st, 2008, how many shares are they? They have 30 million shares. Okay? In issue. On 1st of April, they have issued how many additional shares? 5 million. Full mark. On 1st of July, Vernon performed 2 rights for 5 issues at 2.5. The market value company of the Vernon is how much? 3.1. What they are asking us, they are asking you to calculate earning per share. Okay, what is the formula for earning per share? Earning per share is nothing but profit after taxes divided by number of shares. Okay, already we have calculated profit after taxes. Is that already we have calculated profit after taxes? How much is the profit after taxes?
12,875.
12,875. 12,800. 12,800. How much will get? See, 16,000. Just do calculation. 16,175 minus 3,300.
12,875.
1 minute. It is 3,330. Is it right? How much? 3,330. I have written wrong. Is it right? I have written wrong. Is it right? It is how much? It is 3,330. It is 3,330. 1 minute. It is 3,330. 5, 4, 8,
12,845.
45, and it is 21,840. Was it right? It is 21,845. Fine. Now, what they have said, first we have to calculate the shares. Okay. First we have to, what we have to do, we have to calculate. We have the earning per share. We have profit after taxes. Is it right? We have profit after taxes 12,000. We have profit after taxes 12,845. Is it right? 845. We have to calculate the number of shares. How we calculate the number of shares? We will add all the things. Is it right? We will add all the things as such, and then we will calculate the market price. Okay. What we have anything on that? No. Okay, fine. Okay. Is it? We put weighted average number of equity shares. Okay. Now is that this is the date? Is that this is the number number of shares? This is the rights fraction. Is it right? This is the right fraction. We will do this. Okay. This is the period. This is the weighted, because what they have done, they have issued in different dates. Okay, they have issued on different dates. On 1st of January, is it for on 1st of January? How many shares are there? Sorry, not dollars. Sorry, is that how many shares are there? How many shares are there? 30 million. Okay, how many shares are there? 30 million. Now, what is the value per share? That's very important. Is it right? On 1st January, 30 million shares. On 1st April, 5 million shares. Is it? On 1st July, 2 million. Is it? The market value is how much? 3.1. Is it? The market value is how much? 3.1. Okay? The market value is 3.1. At what rate they are issuing? They are issuing rights issue for 2.4. Is that? For 5 shares value is 2.4. Is it right? See, they are issuing how much? They are issuing 2 for 5 rights. Is it right? 2 for 5 rights is how much? Means 2 shares. If you are having 5 shares, they are issuing how much? 2 shares. At what rate they are issuing? 2.4. And what is the value of 5 shares? The value of 5 shares are 3.1. Is it right? In this case, what we have to do? See the thing. I will explain you. Is it right? I will explain you 1 minute. Is it? Rights fraction. Is it right? Rights. What is it? Rights fraction. Rights fraction. Is it? We call in technical terms, you call it as a theoretical X rights price. Is it right? Now, how many? See, they are issuing 2 for 5 shares. How many shares are there? They are issuing. At what rate they are issuing? They are issuing at 2.4. Is it right? How many shares they are issuing? 2 shares. Okay? Now, they have the 5 shares. Is it right? What is the value of market value of 5 shares? Market value of 5 shares are how much? Market value of 5 shares are 3.10. Is it right? See. Now, how many shares are there here? You have 7 shares. We want to calculate each share's price. Okay? We have to calculate each share price. Okay? Now, is it 2 into 3.4? It comes to how much? 4.8. Is it right? 2. And 5 into 3.1, it comes to how much? 15.5. What is the value of total 7 shares? The value of total 7 shares is 2.30. Value of each share. Is it right? Value of each share. How much? 20.30 divided by how many shares? 7 shares. It comes to how much?
2.9.
It comes to how much? 2.9. Is it? It comes to how much? 2. Is it? Now, what is the rights fraction? Rights fraction. There is a formula for this. Okay. Rights fraction is market price divided by theoretical X rights price. Market price is 3.1 divided by theoretical X price is how much? 2.9. You can write, you can do in that way also. Is it right? 2.9. It comes to how much? 1.068. Is it? Means you should have a uniformity. That is the reason why you are doing is we should have uniformity. We should not have we should not have that one shares are issuing at a higher price, one shares are issuing at a lower price. No, we should have a uniformity. Is it right? Now, this is happening when this is happening with respect to 1.068 okay, 1.068. Now, when they are issuing, so dates are important. On 1st January, Vernon has 30 million equity shares in issue. On 1st April, Vernon issued additional 5 million. Okay, on 1st additional 5 million. Okay, equity shares. On 1st July, they have issued rights issue. The market value is this much. What they are saying, they are asking us to calculate as at when they are asking us to calculate as an 31st December 2008. Now, is it how I should write? I will write here, then I will write there also. Is it right? See that this is when 1st January to 1st April. How much? It is 3 months. 1st April to 1st July. Is it right? 1st April to 1st July. Again, how many months? It is for 3 months. And 1st July to 31st December. Is it right? It is how many months? 6 months. Why we are doing like this? Otherwise, what will happen? We are taking the, see, we are taking precisely, is it right? For first 3 months, what is the value of the share? For the next 3 months, what is the value of the shares? First 3 months, 30 million. Second 3 months, 30 plus 5, 35. Is it right? Third phase, 30 plus 5 plus bonus issue. Okay? I will write very specifically the calculations. You will not get confused. That's my, is that? First is how much? 30 million. Now, 1st of April, is it right? 1st of April. First million is 1.68. Is it right? Next. 1st of April, how much? 30 plus 5. Is it right? How many? 35. This fraction will remain same. Is it right? Next. 1st of July. Is it right? 1st of July. Is it? 30 plus 5. They are issuing how much? 2 for 5. Is it? If you are having 5 shares, you are issuing how much? 2 shares. Is it? If you are having 5 shares, how many are you are getting? You are getting 2 shares. If you are having 35, how many shares? 35 divided by 5 into 2. How many shares? How many shares? For 5 shares, is it right? For 5 shares, rights are how much? Rights are 2. For 35 million shares, rights are how much? Question mark. Equal to 35 divided by 5 into 2. 14 million shares. 35 plus 5 plus 14, it comes to how much? 49. Is it right? 49. For 49, there is no price because, is it? 1 minute, 1 minute, 1 minute, 1 minute, 1 minute, 1 minute. How much they have issued? 49, 1 minute. Forty 49 into is 1 minute. 1 minute. This is 3 by 12, this is 3 by 12, and this is 6 by 12. Okay, this is for 3 months, is it? This is for 3 months, this is for 3 months, this is for 6 months. Is it right? 30 into 1.068 times 3 divided by 12. One 30 times 1.68 divided by okay 35 times 1.068 divided by 3. Okay, 1 minute. It's done. 35 times 1.068 divided by 3. How much? 35 into 1.068 divided by 4. Okay, 49 divided by 2. Fine. Okay. Okay. Fine. Is that? I'll just. Okay. Now, weighted average is nothing but. Is it right? Weighted average is nothing but 30 million shares. Is it right? See, one I will put like this. Is it right? Column 1, column 2, column 3, column 4, column 5 is equal to 2 times 3 times 4. Is it right? 2 times 3 times 4. Is it right? You put it. How much you'll get? Just tell me for the first one. 30 million times 1.068
8.01.
8.0. How much? 8.01. Okay, next. 35 times 1.068 times 3 by 12.
14.7.
How much?
14.7.
Check again, please. 35 times 1.068 times 3,
9.345.
9.345. Forty-nine into 6 by 12.
24.5.
Total how much? 24.5 plus 9.
41.855.
41.85. Okay, 41.855. Is it right? This is nothing but N. Is that? This is nothing but N. That much you have. Is it? This is nothing but N. Now, EPS is equal to profit after tax divided by N. Profit after tax is this much. Number of shares are 41,855. It comes to how much? It comes to
0.306.
just go through it. Anything is there, just let me know. One thing I will do, okay? I will send this file to you, okay? I will send this file to you and you revise this one and you have that ratio analysis also. Is it right? You have that ratio analysis. Calculate all the ratios. Is it right? Calculate all the ratios. Just write down there. Where are they? Where is that? Can I move up?
Yes.
Is it right? Fine. Now, they gave 8 marks. Is it right? They gave 8 marks for ratios. Is it right? Now, following has been, interest has been. Okay, they gave the balance sheet and is it right? They ask you to calculate. Is it right? I will write here. Is it right? I will write here. And once you have done, you have see return on capital employed. Okay, return on capital employed, return on equity. You send me this net assets turnover, okay, gross profit margin, is that gross profit, operating profit, okay, operating profit, current ratio, quick ratio, is it right? Quick ratio. I am writing separately all inventory, receivables, is it right? Receivables, payables, payables, is it right? Gearing, is it right? Interest cover, dividend cover. How many are there? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. If you do 13 ratios now, 13 ratios with comments. Is it 13 ratios with comments? Once you have done this, send me message 1 hour before. Okay? Send me message 1 hour before. And according to that, I will make myself available. Okay? I will make myself available. Just send me one hour before. If I am somewhere, I will update you, and you do the analysis. Is it right? You do calculations. Is it right? You do calculations. I will tell you the things also. Is it right? When you have done the calculations, what will happen? This will be for liquidity. Okay? This will be for liquidity. Is it right? This will be for liquidity. And this will be for gearing. Okay? This will be for gearing. Is it right? You will have the gearing. Is it right? And you will have, this is for the profitability. Okay? This is for the profitability. Is it? This is for the efficiency. Is it right? This is for the efficiency. This is for the investments. Very simple. It's like an exam you do. Okay? Like an exam you do. Is that this is 1, this is 2, this is 3. First you have to follow the sequence also. Is it right? It makes sense, something. At least initially, this is 1, this is 2, this is 3, this is 4, and this is 5. Taking all the adjustment, first see what nothing is there, is right? You have additional details for you have owned plant, net assets turnover, is it right? There are no disposals of the plant during the year by other company. Okay, nothing is there, no adjustments for that. Is it right? The interest rate implicit with breakout is 7.5% per annum for the purpose of calculating ROCI and gearing. Is it right? All these liabilities are treated as long-term interest-bearing borrowings. Fine. You do it. Is it right? Now the following has been calculated for this. Means they see. Whatever they have mentioned, all you have to do this. Is that all ratios you calculate it? When you are comparing it, compare with this. Is that compare with these things? It makes sense. Okay? It makes sense. And always, whenever you are doing, see, they are talking about astral, they are talking about the breakout. Is it right? They are talking about the astral, they are talking about the breakout. Already they have calculated the ratios? No. No, they have, see, you have to calculate the ratios and astral and breakout. 1 minute, astral and breakout. Now what they are asking us? They are asking us to calculate for the breakout. And they are asking us to make a comparison with astral and breakout. Analyze relative performance. They have calculated for one company. Is it right? You have to calculate for the other one, and you have to make a comparison with this one. Is it right? If that is the case, you should make it a point that you have to calculate for where it is for, you have to calculate for the breakout. You calculate for the breakout, make a okay, and make a comparison and do an analysis. Very simple way of scoring marks, ratio analysis. 20 marks, is it right? 20 marks, maximum, maximum, maximum. If somewhere, maybe, if it is not there, you can score minimum 19. 18, 19 you can score. This is the easy scoring section as such. Okay? Can you send me? When you can send me? By what time? Take your time, no problem.
By 5 or 4
No problem.
o'clock.
Okay, by 5 or 4. Okay, fine. Once you send it, I will check and get back to you. And inshallah, by 5, 4, 5. Okay, by 5 I will be free. Inshallah, I'll get back to you by 5, 5:30 or so. I will wait by 5 o'clock, inshallah. Okay?
Okay.
Can I stop now?
Yes, please.
Even if you want, if you want to do section A and section B for this, inshallah, I am here for you.